Hey, I'm Dan Fitzpatrick at StockMarketMentor.com, and this is your chart of the day for the weekend of August 15th, 16th, and I want to look at drugs, more specifically drugstores, pharmaceuticals. Here's why. I think they're getting ready to make moves here. You can see RiteAid has essentially been drifting sideways for a long time. You look at the weekly chart, you can see it. Plenty of baby boomers getting old, needing those drugs. So it's not exactly like this is in a shrinking sector. I'm looking at this. It's at $9 right now. If the stock starts trading above $9.50, frankly, the way this weekly chart looks, I would have to say $10 is in the bag. By the way, you can think like, what's that? Like a 50 cents from $9.50 to 10? Dude, do the math as far as percent return. A move from $9.08 to $10 kind of works for me. Maybe that's just me. Maybe I'm just getting old. Well, I am getting old. Okay, so that really works. And then CVS, they really stuck it to the old guys because they took Viagra off of their list of stocks. Not stocks, but their list of drugs that are on their formulary list. In other words, they probably won't be able to sell as much of it. So that's a drag, right? But it's good for the stock because you get that. The stock holds right above the 50-day moving average, and this is working. Weekly chart shows this long volatility squeeze, kind of a breakout, and then this 2-week rest. So this is actually, I think, a good time to be entering. You're not buying a momentum stock where you're just crossing your fingers hoping that it just keeps moving higher and higher. Here, you've got this stock that's moving higher, and then you let it pull back right to the 50-day moving average where it's been correct to buy the stock several times, and I think it is now. So if the stock starts trading below 106, and see, here's the challenge. If it starts trading below 106, then, oh gosh, well then maybe it's going lower. Okay, fine. Down at 101 is the 200-day moving average, and it hadn't been below there in quite a while. So where do you put your stop? Honestly, I can't tell you. I'm not going to tell you. Have a risk management plan in mind, but you need to figure that out because there are any number of support levels below. So it's nothing more painful. There are a few things actually, but where you get stopped out here at 820, then the stock hits 775, rockets up to $10 without you, and you're wondering what the heck happened. So the bottom line is this: like on RAD and CVS, I think these stocks work. As far as whether you put a stop on them, that's an individual thing. I'm not just going to be dogmatic about it. I'll just say no up front, how much money you're willing to risk. So anyway, that's it for this video. Members, over to the strategy session or the weekend update. I'm actually covering utilities in the sector spotlight this week. So that's kind of new.